If you are thinking about buying a property in Dubai, getting the mortgage wrong can cost you thousands. In this video, I'll walk you through the top 10 mortgage mistakes and how to avoid each one, so you don't waste time or money. I've seen expats from all over the world assume that getting a mortgage in Dubai is just like back home, but they often run into hidden fee, low approval rates, or terms that don't suit their plan. This video will help you avoid those traps and finance your home the smart way. Before we start, if you want to know that if you can qualify for a mortgage, what monthly payments you can expect, and what interest rate that you might get, you can complete our mortgage calculator at setuphero.com/mortgages. Now, coming to the topic, the first mistake is not understanding how much you can actually borrow. In Dubai, most banks will only finance up to 80% of the property value if you are a resident, and for non residents, the maximum is often 50 to 60%. Many expats assume that they can get more, only to be shocked at the cash they need to pay upfront. Before you start searching your dream home, speak to a mortgage advisor and get a pre approval. That way, you know your budget before falling in love with something that you cannot afford. Another mistake is ignoring the total cost of buying, not just the down payment. Beside the mortgage, you will need to pay for DLD fee, that's the Dubai Land Department, agent's commission, the real estate agent, the valuation charges, and bank arrangement fee. These can easily add up to 7 to 8% of the property price. If you don't budget for these costs, you might have to delay your purchase or scramble for cash at last minute. Plan for full budget early and make sure that you keep a buffer. The third mistake is choosing a mortgage term that doesn't fit your goals. Some buyers choose a 25-year term for lower monthly payment, thinking that it's the safest option. But longer term means you pay more interest over time. If you're planning to sell or upgrade within 5 to 7 years, a shorter term or a flexible rate might save you more. It's important to match your mortgage to your long-term plans in Dubai. Many expats also don't compare mortgage products from different banks. They just go with the first option their agents recommend. But Dubai has a competitive lending market, and banks change their offer often. A 0.5% difference in interest rate can mean tens of thousands over the life of the loan. Always compare multiple offers and look beyond the rate. Some banks have high early settlement penalties or hidden insurance costs that can surprise you later. The fifth mistake is not having your paperwork ready. Dubai's banks are strict with documentation, and delays can kill your deal. You will need a salary slip, bank statements, tax records from your home country, and property documents. If you are self employed, the process is even tougher. Any missing items can set you back weeks. Start gathering everything early and work with mortgage advisor who knows how to package your file properly. Something we help at Setapiro as well. Some expats also make the mistake of choosing a fixed rate when rates are falling, or going for a variable rate when they expect to stay long term. The interest rate environment matters. Speak to someone who understands where the market is headed. Locking into the wrong rate structure can cost you far more than expected, especially if you plan to refinance or pay off early. Another thing to watch out for is debt to income ratio. Dubai's bank have a cap on how much your income can go towards debt payment. If you already have loans or credit cards, it can reduce your borrowing power significantly. Some expats get caught off guard when their application is rejected or approved much less than expected. Make sure your existing debt are manageable and check your credit history before applying. Also, be cautious of off-plan purchases where the mortgage kicks in only after project completion. Some developers offer post-handover payment plans that seems attractive, but they often come with risk. If the project is delayed, your entire financial timelines get disrupted. Always check if your bank will approve financing for that specific developer or project. And finally, think about the currency that you earn in. If you get paid in dollars, euros, or pounds and your mortgage is in dirhams, currency fluctuation can affect your real monthly cost. Over time, even small changes in exchange rates can impact your affordability. Some expats look into foreign currency mortgages, but these comes with their own risk and rules. One extra tip is that if you're moving to Dubai and planning to live here full time, it's worth getting the residency first. Residents usually get better mortgage rates, higher borrowing limits, and more flexibility. If you're setting up a company or getting a visa, we can help you do that as well. And it makes a big difference to your mortgage bottom line. Dubai's property market is attractive, especially with no property tax and stable rental yields. But financing side has to be done right. A good mortgage setup can save you money every month and protect you from risk down the line. If you're ready to buy a home in Dubai and want to compare your mortgage options properly, you can go to setuphero.com/mortgages and complete the calculator. We'll show you what you qualify for, what your monthly payments will look like, and which bank might be the good fit for you. And if you're serious about buying a property in Dubai, you should really check out my next video right here.